What is going on, team, and welcome back to another edition of the Ask Maddie Show. We're going to be covering your guys' questions today. We're going to be talking about FLR, Zcash, ZBCN. You guys asked for a little bit of a breakdown on that, so did a little bit of research for you guys to kind of give you guys a little bit of that comprehensive overview. We're going to be taking a look at that. Before we get into that, though, guys, I need you guys to know that we come from CryptoCharge.com. We go live Monday through Friday over there. We have our coin library with entries and exits. We have an abundance of learning center resources, as well as our Discord community where you guys can ask questions, as well as jump on some of our leverage trade ideas. So make sure you guys use code YouTube to get a 30-day free trial, plus 50% off any membership. Comes out to $49 a month or $4.99 for the year. So we're going to get into your guys' questions. We're going to be kicking it off with a question about FLR. So Marvin2554 asks, with the FLR association with XRP, obviously talking about the new XRP that we mentioned on Monday's episode. If you guys didn't catch that, go check out Monday's episode of After Hours. We talked about MXRP and FXRP, both wrapped synthetic versions of XRP. Where do you see the potential of FLR if XRP goes to $18 to $25? So, first of all, we try to do pretty much everything based off of like Fibonacci extensions, and if we have evidence of other support or resistance levels meaning something to us, meaning we've reached those in previous cycles, we can use those as areas of evidence as well. So we can of course look at several ranges in here, and for some of you guys this might be a repeat exercise in here, but nonetheless we have to kind of dress down the chart or dress up the chart in order for us to understand what's possible. So one of the biggest ranges everyone and their mom is watching for is the 2018 through 2020 range in here, which suggests somewhere between on the low end of $5 and upwards of like a $13, and then you get to the 8 extension, it puts us around $25. You bring in the range here from 2021 through the low here in 2022, we kind of look some upwards of like the $22 to $25 range. So with these two more recent wide ranges in here, you don't really see 18 as a repeat number. You see the low to mid 20s as a number, and then 13 as the other side of that. Now of course the other range that we could use that's old but still could be valid is this 2013 range in here. And of course, now we're starting to get a little bit crazy in here as far as number of values that would appear. But nonetheless, we still see 13 and 22 as those repeat figures. So I would say in this instance, we'd probably still be looking again at 13 as our top of range situation, but we could be looking around like the $22 to $25 region as those next blow off tops. Not a lot of evidence from the three different macro ranges that suggest an $18 price point specifically. But let's say we do get out to that, $22 mark, give or take, right? That's kind of an area of interest in there. I think that one of the things we would need to look at is going back to the FLR chart. So we look at FLR USD, and we'll go to the Coinbase chart here, and we would use a similar range, right? So we go from the 24 high in here. We have obviously way less price history, so it's a little bit difficult to get a handle on it the same way. So an equivalent extension for FLR would be like the 20-cent mark for a $13 XRP. So $13 XRP equals a 20-cent FLR. Now, can things change and expectations change? Of course, much different market capitalizations. There's a lot of things in play here that can determine how far something can go. But we try to use 1.618 through 4.236 as our cycle-based exits. But we're talking about something exceeding our expectations, right? We're talking about the low to mid 20s for XRP. So if you were looking at an 8 extension, that'd be around a 37-cent FLR. So from current market, be roughly like a 1500% move for FLR up into that 37-cent mark. Again, flipping back quickly here to the XRP price chart, and we don't need to bring the Fibonacci back into this, but we measure from current market up into, let's say, like that $22 mark. It's roughly a 700% move. So although they, are going to share maybe the extensions, if we're going pound for pound on the extensions they could hit, if we're going to look at similar scenarios, FLR probably has a little bit more upside. Now, again, a little bit of a newer asset, difficult to say with confidence that's exactly where everything's going to land. We are talking about exceeding what our expectations are for the plan that we've laid out in the coin library for you guys for XRP, as well as in this instance FLR. But that's kind of how I go about it within that comparison. Of course, you guys can go and use the marketcapof.com calculator, great way to look at different market caps and compare and see, what those multiples look like either at current market or at the previous all-time high. Lots of tools for you guys to check out. But that's kind of a quick little analysis you guys could use if you're going pound for pound on those extensions. Let's go ahead and move on to our next question here. We have from Sean. I'm not going to read all the numbers in there. Are you taking any profits at this point given the massive run up? Is there any news or reason why it has gone up so much in the last few days? And we're talking about Zcash here. So let's go ahead and take a look here at the Zcash chart. And now I'm back to using the aggregated trading view chart because we now show the same all-time highs. At one point, we had Coinbase registering a much higher all-time high than the aggregated chart. And again, of course, aggregated means it's pulling from multiple exchanges. So that means that one of the major exchanges that TradingView pulls from when it comes to the aggregated charts was showing a much lower price. Now we've seen, that come come into unison across the board, lots of confluence across the board. But we are seeing pretty much straight up vertical price action here on Zcash. We pointed to many times, guys, on the Crypto Charge live show, this cup and handle that's been forming in here. And we talked about the cup when we saw this rounded behavior coming in here. We didn't start talking about it when we saw, even this $70 mark over here. We were talking about it way back in here. Important that you guys on macro structure start to identify what you think to be some of those potential patterns, because that's really where it pays off, not when you see the pattern complete. Once the pattern's complete, not a lot you can do with it, right? It's more about retrospect and saying, okay, cool, that was a pattern, but not really super helpful, right? Now, one of the things that we've seen here is a huge break over this double top in here. So over here in December of 24, and again here in late December, had a big double top in the $77 region, came back for a higher low. You guys can see from the roundedness in here. And even looking left to right, all you've done is created a series of higher highs and higher lows. People get so irritated by that. But you had this $20 region as a low in here. You created a higher low here in the $30 region, even over here in the $35 region. Now, we've extended pretty aggressively here on the 3-day chart. Come down to the daily here. You guys can see we're up, almost 30% on the day, 31% at time of recording. Of course, we're seeing a lot of volatility in here. And when you get these overextensions and you pair that with, for example, bringing an RSI, relative strength index, you guys can see that we were deeply in overbought territory over here, October 2 through October 5. Now, we've come down quite a bit from that overheated territory. I'll pull this up just so you guys can see it a little bit more easily. We come down from the overheated territory, but anytime you're above like this 70 mark here on RSI, that still shows very hot behavior. You can stay in those areas for extended periods of time. But for example, like when we look left here, we look at examples of us being in oversold territory, like we were over here in February of this year. We also have to take that into the same amount of seriousness of like, okay, probably a decent buying opportunity here, paired with some support levels. So the fact that we are seeing overbought territory, of course, never would recommend you guys buy something that's just standing up vertical like this. A lot of influencers will, grab the hottest token of the week and be like, cool, there's another 2x left in this. I feel it because of X, Y, and Z. But I will never recommend that to you guys. When we look at kind of where we are support and resistance wise, you guys can see that we're butted up against a huge block of resistance right now. So all the support in here from 2017, 2018, right? This ended up being a huge distribution structure, very distributive up in here, broke down. You came back, kind of retested this level up in here as far as, the middle pivot zone of this distribution structure. But more recently, you guys can see that we've struck this area with some pretty big confidence in here. And this is an area where we maybe do see a little bit of selling in here. So couple things to consider here, right? One, you can see price move against you or move in your favor still, and maybe work towards the next major resistance level of 211, 285, or right around our first take profit around 350. That's where we're taking our first profit here on Zcash, because again, most of my team has a $18, $20, $25 average because we really did our work in the bear market. Now we're not so concerned about that. One of the things to consider is long-term capital gains. So if you guys have been in this asset for a very short period of time, right? Let's say you picked up Zcash over here in the $35, $40 region, you've seen a nice pop in it, and you already are planning on paying that short-term capital gains. Not a big deal, right? Maybe you want to realize that now. Now we are heading up into the end of the year here, right? We're in October, we got November and December, right? So if you realize a profit and it's going to be, maybe a short-term versus long-term capital gains, that is going to be something you have to pay in April of next year, right? So it might be worth, even though you might not be able to capitalize perfectly on a breakout back test buyback strategy, holding on for that, because sometimes that tax benefit outweighs this short-term gain. So my expectation is that we can actually chop anywhere around in here, right? The ideal situation is we set the higher low in this $78 to $70 region. There is a gap down here towards 55, but we could chop around in here all day long, and this would still be healthy, because that's all we're watching for in these macro charts is those higher highs and higher lows to set in. You guys can see there was a lot of chop when this higher low set in. With this low set in, you could see the same chopping in here. Now again, don't look at this and say, Mets, this is going to chop around until February. Just showing you guys structurally what should happen here. So can you take a profit? Sure, absolutely. No one goes broke taking profits, but just make sure you guys are considering those long-term versus short-term capital gains if that is something that affects you. Of course, guys, when you're looking at your target making in here, we're not using the crazy illiquid high over here from $29,000. We're using the liquid high around 900 here. So you guys can see from the fib retracement level that we are looking around, 230, 360 is kind of like that big, pocket where you could potentially see a little bit of selling from there. And then we have 1500 and onwards as some of those other extensions. You guys can also bring in the fib from the more recent high in here to the low. And do we have overlap? Yes, absolutely we do. You can see 230 is a big overlap. 360s overlap, 920s overlap, and then you have like the $1,500 area as overlap in there. So fair amount of confluence. I think that Zcash still has miles and miles to go, but make sure you guys are looking at some of the other opportunities that we have. They're still kind of in this laggard position, and don't chase the stuff that's up so big like this. We have how high do you think Zcash could go this year? I guess I jumped on this one a little bit already. It's already up 120 today. Obviously a lot more than that. We're looking at $170 Zcash. I wish I knew more about it. I used to hold it. Yeah, and this is kind of just the reality of being in the space is that, you start to look at the new projects out there, you look at the new narratives, whatever it may be. So this cycle around AI was just a huge component of the cycle. And then AI agents became kind of the new buzzword that everyone was focused on. And, the sentiment and how bullish retail feels is generally very short-lived, and I generally don't look at that as a good North Star for my investing long-term of what I actually want to hold. I look at a lot of different verticals when it comes to crypto, and there's always going to be new verticals that emerge. But I look at a lot of different, verticals that have been here for quite some time, right? Privacy is a factor that's been here for a very long time. We're starting to see a lot of other networks pick up like ZK rollups or other zero knowledge proof protocols to help, kind of enhance that security. But when you have, a classic proof of work model, like Bitcoin and, in this case, Zcash syndicating a similar model, but then you're able to use shielded transactions. To me, that's a very valuable component, and it's something I think is going to continue to be valuable as time goes on, as more of these networks become more public, more information is more public, and the government's able to track more. Privacy is always going to be a factor that people look at. So, don't feel bad that you didn't, hold out for the most perfect investment. There's plenty of other investments out there, but as this kind of next bear market sets in, I would absolutely consider looking at privacy as a factor to consider for allocation in your portfolio. The big question here that we had today, and we're going to be covering this in a little bit of kind of like a presentation format, is about ZBCN. So Analytic Living said, "Can you please do a video on ZBCN?" My goodness, one of only 5 projects invited to SOBIS. I believe that was a big conference. So maybe Amsterdam, Netherlands. I'm butchering that, but I know it was somewhere over in that region. It's a payroll powerhouse, partnerships with the NBA and NHL. That's actually not true. I researched this. There is speculation that that's potentially upcoming, but I will not say that is a fact because there has been no official announcement. That's speculation. This is a future American utility RWA, but yet there's massive resistance to discuss this. So my question is, what are your red flags regarding ZBCN? So first of all, I don't think there's resistance. I think everyone and their mom has been talking about Zebec Network, and really it comes down to price performance more than anything. You ask the average person what really makes Zebec so special, or what makes ZBCN so special, and they'll talk about payrolls and real world asset management, but really there's a million competitors out there that are offering a very similar suite. So again, I'm not anti ZBCN. Most of this is going to come down to where price is today. I'm going to show you guys the chart, kind of look at overall upside potential. And of course, when there's other competitors in the space that structurally from a price perspective, or maybe you're offering a better ROI, I'm going to lean into those other solutions there. So we're going to take a quick look at that. If you guys do not know what page we're looking at right now, you should not be invested in crypto. You guys should know what coinmarketcap.com is. It should be your number one place to start when you guys do some research, and you should be doing research before you ever buy a penny of anything, right? These are your hard-earned dollars, and I hope that you guys work hard for your money as well. I know that I do, and I want to make sure I'm being a good steward of my money. So research is very, very much worth your time. If you ever in a moment you're like, oh, if I don't buy right now, I'm going to miss out. Well, it's okay, right? Like, you have to be okay with letting some opportunities pass you by, especially if it's that urgent of a situation that you can't just do a little bit of research, right? So you guys should start here at CoinMarketCap. As a quick overview of stats, you guys can see market capitalizations right around 400 million right now. So I'd say that's still in the small cap side of things. Some decent volume here, 15 million in the last 24 hours. You have, your circulating and max supply here. We're going to take a look at those. And then you have 2 very important resources down here. So you guys will see one for the website and one for the white paper. If you guys don't crack these open, again, you guys should not be investing in anything until you crack both of these open. It will tell you so much about the project. You guys can see down here a little bit more information about contracts. This obviously runs on the Solana network. And a lot of other quick stats here. This is the white paper, guys, and I'm not going to go through this whole thing. We're going to go through some slides instead, but this is something you guys should be cracking open. This is actually a very good white paper, and there's a lot of quick resources. There's of course a more comprehensive white paper that you guys can look into. There's an overview here. You guys can take a look at the granular tokenomics. We're going to take a look at more of a broad view of that, but you guys can see from a more granular view, seed, private, public, contributors, community rewards, all that good stuff. The software developer kits, getting started as far as actually utilizing the protocol, whether you're a consumer or you're on the developer side of things. These are resources that you guys should be exploring, right? Because I see so many people who are hyper bullish, but they've never cracked this open before. So I kind of don't care what they have to say about it because they don't know anything about it. Let's go ahead and take a look here at the slides I have for you guys regarding Zebec Network. So first of all, just some core fundamentals. Obviously, we're focused on real-time streaming payments, enabling continuous on-chain payments, ideal for payroll, subscriptions, and DeFi settlements. Payrolls, of course, like we mentioned in the comment here, the question here, is one of the main proposition values. And again, not necessarily a unique vertical, but when we're talking about payroll, Algorand's also a very big competitor in that space, where they showed an example of, I think, paying 2,500 or 3,000 employees for roughly 52 cents and pretty much instant settlement. So again, not tearing it down, but it's not proprietary in a lot of aspects there. The core products are going to be Zebec Pay, Payroll, Zebec Safe, and Zebec Card. So of course, when you have plug and play customer facing solutions, to me, those are the bigger values than just the protocol level itself. We also have, oops, go ahead and flip back here. I'm going to get back to the presentation. Sorry about that, guys. Key metrics, so 100 billion total supply and 92 billion circulating. So most of it, 92% of it is circulating right now, which is a good thing. When you have a huge cohort that's being held back, or it's on a very, very loose vesting schedule where you think this could be dumped on you in a short period of time, that's not something that is a very net positive thing. Average block time of roughly 6 seconds. It's very, very quick block time. And then current throughput around 2,000 to 3,000 TPS. It's a little less than kind of like where we are with HBAR right now, but it's a very high TPS when you compare it to the traditional methods of like MasterCard or Visa. As far as tokenomics, the ZBCN tokens function as both government and utility tokens. So for either voting or for using as gas, fees, staking, and ecosystem access. Transaction fees are partially burned, so it's a deflationary aspect. We've also seen this occur with the Casper network with the vote to burn tokens on transactions. That'll help kind of offset that inflationary rate. And the remaining fees reward validators and stakers. And we of course have predictable gas fees. So again, having just a very binary amount, a cost for conducting business on the network. As far as the tokenomics breakdown, we have 20% for investors and treasury, 20% for team and advisors, 35% for ecosystem and partnerships, and 25% for community rewards. I would say this is a very good blend in here. Of course, you don't want to see something where you have, for example, 50, 60, 70% that's going to team and advisors, and a very small sliver that goes to ecosystem and partnerships and the things that actually help growth within the network. So this is, I think, an overall good blend. Again, looking more at that granular schedule that we talked about from the white paper is going to tell you a little bit more about what tokens might be available for selling in the more immediate future. There's also other websites you guys can look at that will show you those unlocked schedules. Some of them are a little bit more premium as far as how much data you guys want to see. But overall, again, most circulating supply on exchange right now or available for changing of hands, and then of course a pretty decent blend here as far as the tokenomics pie chart. Governance model, we have a hybrid approach, so community debate plus on-chain voting, not super unique here. Zebec improvements protocol, or ZIPs, drive decision making. This is really no different how the XRPL or pretty much any other decentralized network works. How you have discussions, you have back and forth, you'll have a vote that goes in with those governance tokens, and then based on the outcome of that and what quorum is required, the proposal will either pass or fail. Token holders vote on upgrades and policy changes, and of course promotes transparency and community-led evolution. So all good things, but nothing proprietary in my opinion. As far as consensus mechanism, currently operates with optimistic rollups. So what does that really mean? Optimistic rollups are, to me, the equivalent of the Lightning Network for Bitcoin. So you have all of these microtransactions that might be added to the network, but they're kind of offline to some extent. And then once you're ready for a certain number of transactions to be validated, then they get pushed through as one big block. So instead of waiting for each individual confirmation, you can have your transaction pushed through, and then there's a big block confirmation as time goes on. So there is drawbacks to that, right? But in the name of efficiency and freeing up some of that block time, especially for smaller transactions, it's probably one of the more realistic ways that we're going to be moving forward. Of course, they're going to be transitioning towards ZK rollups. This is something that they're using on the Ethereum network and a variety of other networks as well. Again, not proprietary, but something I think is net positive. External data availability via Celestia integration. And then the modular approach allows for flexible consensus evolution, which is positive. It's the same thing that we think about Casper Network with the upgradable smart contracts, when you're able to alter some of the core products without sacrificing the security of the network itself. Let's talk a little bit about the layer 3, or the modular layer 3 that they call Nautilus chain. Zebec's dedicated layer 3 chain built to power real-time streaming payments, DeFi, and enterprise settlement with ultra-low latency. Modular architecture separates execution, settlement, and data availability layers for parallel processing and independent scalability. So this is an example of either sharding, which it says down here on the next component here, the next point down, where if you guys look at the way that your PC works, when you look at the partitioning that happens within drives. There's a lot of different functions where it doesn't need to check the entire system in order to conduct a certain function. So when you're able to partition or shard out different responsibilities, you're able to execute tasks that are maybe a little bit more on the light side without necessarily calling on all the resources from a macro protocol level. Like I said, around 3,000 TPS today, targeting 50,000 plus. Now, anytime I see these huge numbers, even HBAR says, they hypothetically or theoretically can do over 10,000 TPS. That still needs to be proven with actual load, right? And not just like, light load or load when we're seeing, let's say very light activity or bear market activity. We need to see a stress test like we saw with Solana, where everyone, was talking about the theoretical throughput of Solana. But then when you actually see a whole bunch of, meme volume, whether it's with Trump coin or Millennia coin or all the other meme coins that are running on Solana, you had huge congestion. You had even major exchanges unable to get that settlement down, even within a matter of hours, right? You're able to sometimes take that even like regular scalability, and it becomes very, very difficult to get even just regular throughput through. So although I like these numbers, they don't really mean anything to me until I've seen a true proper stress test with those numbers. So again, 1,500 to 3,000 TPS is fantastic. And that's a really good, consistent place to stay. Stress testing, would like to see if those numbers stay consistent. And as ZK rollups come on, if we're able to get anywhere close to that 5-figure TPS, that's where things really start to change, because now you're doing 3 to 5x what Visa and MasterCard can do. And then, of course, bridges EVM or Ethereum virtual machines and non-EVM ecosystems using Solana for settlement and modular DA layers like Celestia for secure off-chain data handling. So again, syndicating a lot of value from the Solana network, and that's not a bad thing. As we start to see some of these bigger ecosystems come online, of course, you're going to have a lot of developers that want to use those SDKs or software developer kits to develop their own protocols, syndicating the major value. No different than like a federated sidechain for XRPL. As far as partnerships, again, NHL and NBA have not been confirmed, so I do not consider those valid. We can look at that as a potential down the pipeline, but it's potential until we actually see a true announcement. I think that it was like Uphold maybe posted like a basketball or something with Zebec on it, and absolutely awesome if it is. But remember, that doesn't really necessarily mean that price is going to reflect that news immediately within price itself. So we have OpenDesign, integrating Zebec's real-time payments rails to enable continuous research funding and payroll for decentralized science initiatives. Circle, so USDC, so they're a member of the Circle Alliance, leveraging USDC for settlements across Zebec payroll, Zebec card, and treasury operations. Again, as we start to see maybe the USDC ecosystem grow and Circle's offerings grow, you're probably going to have multiple DEXs, liquidity pools, including probably Ripple's liquidity pool, to be able to syndicate across those. So I'm not a person who thinks that we are a one-chain society. I think there's going to be a lot of interoperability as far as those liquidity pools go. And then, of course, Ondo Finance. You guys are very familiar with Ondo, I'd hope, at this point. Partnered to merge Zebec streaming payments with Ondo's DeFi liquidity solutions for automated payroll and treasury yield. So let's go ahead and take a look at the Zebec chart. I'm just going to show you guys where we are price wise. We're going to come back to the aggregated chart here, and we have price action that starts back here. We'll come out to the daily price action that comes back here to like April of 2024. So we're still on a little bit of the newer side of things. Let's go ahead and mark up our key S&R zones in here. So we did get a nice breakout back test in here. I am happy with that. So we had a very extended period here where you had all this resistance, right? So you had resistance over here, June, you had new lows set over here in August 24, striking those lows again here in April of 25. Again, I don't think that anyone was super bullish here when you were down here at these lows. It's after you get these kinds of breakouts and impulses that the quality of the tech and the excitement around the protocol as a whole really picks up, which is not a bad thing, but I've just seen the flip-flop of sentiment so dramatically based on price action alone. We are creating a pretty aggressive flag in here. This is a classic continuation structure. And that flag is, again, after we broke out backtest in there, looks good to me. You guys can see that this came pretty damn close even here over in July of this year to testing the previous tops in here. But even this test over here in May of this year, back into that resistance, to me, really shows that there's little to no imbalances that got left behind in there. So pretty happy with that. But when we look at how far we are from the previous all-time high, we're only down about 35% from the previous all-time high. So just like XRP, right? Even though I'm still at XRP bull, and it was something that I was just preaching as an automatic DCA when we were at like 40, 50, 60 cents. And now I'm telling people like, hey, there's better options out there, right? XLM, Algo, HBAR, all of these are offering better risk to reward because we're not hovering right around the previous all-time highs. Yes, you might catch that next first mover advantage. You might, or you might not, right? You might see another thing pop first. Timing the market is a fool's errand, and it almost never pans out. So when we look at What's in front of us, though, we can look at, of course, let's strip this down and look at the range here, even though I don't really like this high because it's so limited up in here. So we'll go from this swing high to this swing low. You guys can see we already reached out to the 1.618 in this situation and almost out to the 2.618 in here. So if we were to use the 24 range here, 24 high and 24 low, we measure from here to that full extension, it's roughly maybe 165% from current market. Now, let's use maybe a couple other ranges in here just to see if we can get some confluence in here. So we have this crash over here from February. We have definitely a more liquid high. I would say that's actually probably a relatively valid high because you have some actual price action that was done in here. You reached out to a full 4.236 using this previous structure in here. Now, just because something reaches a 4.236 doesn't mean it can't get much further than that, but these are the areas where I would consider probably scaling out at that point. Let's go ahead and, of course, though, use the more recent crash in here. So we'll use this pretty aggressive crash in here, and this gives us a roadmap of roughly 1 cent to 2.3 cents. That would be the areas of interest here for Zebec. So that would be roughly maybe 130% to maybe a 400% move towards that 2.3 cent region. Can you go further into the sequence and see some of these other extensions hit? Yeah, for sure. But I really try to avoid buying things that are just really, really elevated or near their all-time highs compared to other things out there, especially when you have other things within different verticals that you guys can consider. So again, you do have the beautiful flag in here. I'm not suggesting this isn't going to go higher this cycle. It absolutely is. But position yourself today, right? You don't have a position. Position yourself today. I don't know if it's where I would want to put my dollars today. You have the flag that's in here. You have like a little bit of like a W that's been forming in here since like, let's call it late August. And that could potentially breed your next legs higher in here. If you got to the 8 extension, just to give ourselves a little bit of what that math looks like, it gets close to roughly an 800% return. Again, when I measure up the XLMs and a variety of other assets out there that to their 4.236 are offering, an 8, 9, or 10x, it's hard for me to justify Zebec at these exact prices. Okay. So again, you have a lot of momentum in your favor here. We gave you guys a nice little fundamental breakdown of, everything that you guys should know about an overview there. Of course, I'm not endorsing the project. I'm not telling you guys what to do. I'm not offering you guys financial advice, but I'm showing you guys some of the things that you guys should and need to be doing in order to make educated decisions when it comes to your investing. Okay. So if you guys found this helpful, please let me know. If you guys like the project breakdown, you guys want to see more project breakdowns on the Ask Matty show, let me know. And we'll maybe cover them if they're, popular enough, or if you guys are, showing some interest beyond just one or two of you guys, happy to cover those. Otherwise, guys, we'll be back with you again on Monday for after hour show. Have a great day.